Hi, Else here, and in this video we'll be talking about writing off and reinstating accounts receivable. Remember from our last video that at the end of 2014 we had made an entry to record the allowance for doubtful accounts. Our ending balances on the balance sheet were accounts receivable $360,000 and allowance for doubtful accounts negative $25,000. Now, let's look at the next year to see what happens when we have to write off an accounts receivable that goes bad. At January 1st, 2015, our opening balances are equal to our closing balances from the previous year. Therefore, accounts receivable is $360,000 and the allowance for doubtful accounts is negative $25,000. Say that the following things happened during 2015. 1. The company provided $2,560,000 of services. Things are definitely looking up for the company. Unfortunately, in order to grow sales, the company offered very good credit terms. Customers didn't have to pay for 60 days. So 80% of their sales are on account. The remainder of their sales were for cash. 2. The company collected $1,983,000 from their accounts receivable customers. 3. You remember our customer that didn't pay at the end of December 2014? The one we thought might be collectible? Well, it turns out that customer declared bankruptcy. The company has to write off $18,000 worth of accounts receivable. 4. After the accounts receivable were written off, our customer closed their business, sold all their assets, and they sent us a check for $4,500. Sure, it's not the whole $18,000, but it's better than nothing. The company cashed the check immediately. Now, make the necessary entries to record all the transactions. Remember the critical questions we have to ask ourselves when we analyze transactions. What did we get? What did we give away? If those critical questions result in unclear answers, we need to move on to our clarifying questions. What did we earn? What did we use or consume? And finally, what do we owe? Let's look at the transactions. First, the company provided $2,560,000 of services, 80% on account. What did we give away? Services, which means we earned revenue. Revenues increased by $2,560,000. What did we get in exchange for those revenues? We received 20% in cash, so $512,000 of cash increased to assets. We also accepted a lot of customers' IOUs. Customers owe us money, and we have a legal right to collect cash from them, which means we record $2,048,000 in accounts receivable, an increase in assets. Now, when we are working on accounts receivable, we have to keep a running total of that account so we can figure out what's going on. Let's start that running total for both accounts receivable and the allowance for doubtful accounts now, so we can keep track of all of our transactions. On our running total, we always start with our opening balances. This is something students frequently forget, and then everything else is wrong. For accounts receivable, we have an opening balance of $360,000, and for the allowance for doubtful accounts, we have an opening balance of negative $25,000. Now, let's record our transaction, an addition of $2,048,000 to accounts receivable. Moving on. Our second entry, the company collected $1,980,000 from their accounts receivable customers. What did we get? Cash, so assets increased by $1,983,000. What did we give away? Well, we gave back a lot of customer IOUs because they don't owe us money anymore. That means we have to decrease accounts receivable by $1,983,000. Let's add that to our running total. Accounts receivable decreased by $1,983,000. Now, our next transaction is the customer who finally declared bankruptcy. The company has to write off $18,000 worth of accounts receivable. How should we record the write-off? Well, the first thing we should do is decrease our accounts receivable because we now know who is going bad, so we can get rid of their account. Therefore, our accounts receivable will go down by $18,000. What about the other side of the entry? A lot of students are going to record a reduction to equity of $18,000. They're going to use the bad debt expense account. Is that entry correct? No, not at all. Why not? Because in 2014, we already charged bad debt expense when we booked our estimate. We can't charge the expense account again. That would be doubling up. How can we remember that when we do a write-off, we're not allowed to touch the expense account? Well, the words write-off start with a W and an O. If it doesn't start with an E, don't touch the expense account. What then should we do instead? Well, in 2014, when we booked the estimate, we also made an allowance. Remember the allowance for doubtful accounts? That was the allowance we made for when the accounts were going to be written off. Now we know which accounts are going bad, so we can use the allowance up. When we write off accounts receivable, we always use the allowance for doubtful accounts. After all, if you make an allowance, you better use it later on. So, the correct other side of the entry is to decrease the allowance for doubtful accounts. Should this entry be a negative or a positive? This is an error that students frequently make. We're using up the allowance, so you might think the amount would be a negative, but you would be wrong. Remember that the allowance for doubtful accounts is a negative number because it's a contra asset account. Therefore, in order to reduce a negative number, we have to put a positive against it. Another way to tell that we need to put a positive is because we already have a negative against accounts receivable. If we use another negative, our equal sign in the accounting equation just won't work. So, our entry to write off the $18,000 is a negative to accounts receivable to reduce it and a positive to the allowance for doubtful account. Let's flow these entries through our running totals. Accounts receivable goes down, negative $18,000, and the allowance goes down, positive $18,000. Let's move on. After the accounts are written off, our customer closes their business, sells all their assets, and sends us a check for $4,500. We cash it immediately. How do we record this? Well, when we wrote off the $18,000, we thought we'd never see any of the money, but now it turns out that we jumped the gun. We wrote off too much. The first thing we have to do is reverse a portion of the write-off because it was wrong. This is called reinstating the accounts receivable, meaning to put it back where it belongs. Therefore, our entry is to increase accounts receivable by $4,500. We also reduced the allowance by too much, so we have to put the allowance back. That means we need to increase the allowance. Remember that the allowance for doubtful accounts is a negative account, so if we increase a negative number, we have to put a negative against it. So our entry would be a positive to the accounts receivable and a negative to the allowance for doubtful accounts. Now, just to be clear on this, look at our original entry for the write-off. Okay, and now look at the entry for the reinstatement. Notice something? We're reversing the original entry. So when someone who has previously written off gives you a check, look at the original write-off and reverse it. Let's flow that through our running total. Accounts receivable goes up by $4,500 positive, and the allowance goes up by $4,500 negative, because we're increasing a negative number. Now, remember that ABC cashed the check right away. No wonder, they're likely thinking the check will bounce. Just like when customers normally pay their outstanding accounts receivable, we have to recognize payment. We have to increase cash by $4,500 and reduce accounts receivable by $4,500. That's our last entry, so we can add that information to our running total and figure out what our current balances are. Accounts receivable is $407,000, and our allowance for doubtful accounts is negative $11,500. We are now at the end of 2015. What should we do? Well, we have $407,000 in accounts receivable, and we know that we won't collect it all. After all, not everyone will pay us. So we have to use our knowledge of the company's customers and the industry and the economy as a whole, and we have to make a new estimate of how much of the year-end accounts receivable will not be collected in 2016, the upcoming year. Sound familiar? It should. We just did that at the end of 2014, and we have to do it again for 2015. So, let's quickly review all the entries we've learned so far. To record the estimate at the end of 2014, we have to record a negative to both the bad debt expense and the allowance for doubtful accounts. To record providing a service, we have to record a positive to both accounts receivable and revenue. To record the payment of cash on account, we record a positive to cash and a negative to accounts receivable because our customers don't owe us anything anymore. To record a write-off of the bad accounts receivable, we have to decrease both accounts receivable and the allowance for doubtful accounts. We do this by putting a negative against the accounts receivable because it has no future benefit, and a positive to the allowance for doubtful accounts because the negative account is decreased by a positive number. Finally, to record the payment of an accounts receivable that was previously written off, we first reinstate the accounts receivable by increasing both accounts receivable and the allowance for doubtful accounts. And then, to recognize payment, we have to increase cash and decrease accounts receivable. Be sure you understand all of these entries and when we have to record them. If we flow all of this through our running total, we get the ending balance before adjustment in both the accounts receivable and the allowance for doubtful accounts at period end. So, we're done, right? Well, not exactly. What we don't know yet is what methods we can use to determine a good estimate of what will go bad in the future from our accounts receivable. The $11,500 we have in the allowance for doubtful accounts is just a leftover. It does not represent what we think will go bad for our new accounts receivable. Our accounts receivable balance is $407,000 at year end, but we know some of these will go bad in the upcoming 12 months, and we have to determine an estimate about that now so we can record the accounts receivable at their future economic benefit and the expense in the same year as the related revenue. How are we going to do that? Well, there are two methods we can use to estimate the uncollectible accounts receivable, and those methods will be the topic of our next video.